Confessions of an Accountant, where no topic is off the ledger.
The internet and the smartphone. You've had 4 big platform shifts in the last kind of 50 or so years. And then I think we're probably going through, it's fairly obvious now that we're going through another big platform shift with generative AI. I think the really interesting thing is that in hindsight, when you look back, each platform shift is really obvious. You can go back, you can see the bounds of the platform shift, you can see the impact it's had, you see who the winners are in that space, and how they've changed the landscapes and what sort of technology they've built. So I think with hindsight, you can go back and look, but at the time, they are chaotic, and nobody really knows who the winners are, or where it's going to go. And I think it's the same broadly for generative AI in the kind of accounting space, maybe the accounting and the taxation space at the moment is broadly similar. It feels a little bit chaotic at the moment. There's lots of noise. There's lots of people are saying AGI is here, or it's arriving, or it's going to be here in 12 to 18 months. So I think that at the moment, the space is definitely a platform shift happening. It's definitely chaotic. We're not quite sure who the winners are going to be yet. The early leaders are very rarely actually the people that end up winning in the space. So you go back to kind of the smartphones or the internet. Think of Nokia. You think of RAM. Sorry, in the smartphone space. Not really, they're not really major brands as they used to be. So I think we're in that space now. I think there's a platform shift happening. I think it is chaotic. I think we would look back in 20 or 30 years and it will just become really obvious what that platform shift was or how it played out and who the winners are. So I think that's, for a context setting thing, I think that's really interesting. I think it's a super, super interesting time for us to be in and be in the accounting and the tax space. One of the things that we're really passionate about is obviously tax. Super simple kind of concept from us is that the UK tax code is the most complex in the world. So any one individual, whether you're a general practice accountant, whether you're a tax partner, but any one individual can't know the entire UK tax code. But even if they did have all of that knowledge, they wouldn't be able to apply all of that knowledge to every single one of their clients every year. And we look at the existing solutions, so kind of like your Tollies and your Kroner and your Bloomsburys, etc. They built these amazing tax libraries and kind of world-class tax libraries. They have everything you could possibly need in there. But it's a bit like Excel, really, and people only probably use about 1% of what's available. And traditionally, kind of over the last 20 or 30 years, they've sold you access to tax knowledge. But the one thing that we're finding is really what accountants are asking for is application of knowledge. So rather than being sold access to knowledge, it's more around application of knowledge. So as a business, syntax, that's what we're really focused on, is application of tax knowledge rather than just kind of selling access. By the way, if you've got questions or queries, just shout, just pop up straight away and shout. I'm very happy for this to be kind of like an open Q&A session and just kind of let it guide itself and flow where it wants to go. I think one of the other really interesting things in this space at the moment is if we think about technology, certainly from a tax perspective, if we think about go all the way back to the printing press, and we think you go from the printing press through to the internet with a layer of semantic search on top, and now in this generative AI space. When we came to the printing press, we took all of tax knowledge, we condensed it into books, we sold books. So it did allow you, in a way, using index pages, context pages, that sort of stuff, it allowed you to get to the answer slightly quicker. We then moved into an era of the internet, with a layer of semantic search on top. And that, again, allowed you to get to the answer faster. So you would kind of ask a question into a system or kind of semantic search for something, and it would effectively give you the resources for you to, source materials for you to go and read. So again, that was a big shift in getting you to the answer quicker. And I think that's what generative AI is doing now, certainly from a tax research perspective, is getting you to the answer quicker. So now, instead of kind of picking a book up or logging into a digital library and searching, you're actually just asking a question and you're getting an answer back. So if you think about what the large language models are doing, they're kind of your traditional process that you would go through to try and find a tax answer. They're actually taking part of those processes out of the mix, and they're just condensing the process. So as I say, you log in, you ask a question, and you get your answer. There's a whole host of stuff off the back of that. So people talk about hallucinations, people talk about documented error rates, etc. I think one of the other really big things is judgment at this stage. So traditionally, if you were using books or you were using digital resources, you would find the source materials, you would read them, you would apply your own judgment to that sort of stuff. And one of the really interesting bits is, are we now moving into an era where actually we're not applying judgment. We're just putting a question into a system, getting the answer and trusting the output, rather than trusting our own judgment. So I think that's super interesting. Very happy to answer questions on research tools, on large language models, on AI agents, on agentic workflows, etc.
Could I ask a question? Just so obviously you talk about using these tools effectively to ask them really specific technical questions. Presumably, you're talking about tools that are specifically for that purpose, as opposed to your generalistic sort of ChatGPT, where it can look at all kinds of junk from all over the place, some of it correct, some of it incorrect, and then generate answers based off the back of that. Because, for example, just in a silly way, I was looking for inspiration for a social media post last year, and it came up, and because it was the time of year Easter, it said, why don't you do a post about the VAT difference on Easter eggs? And I was like, what VAT differences on Easter eggs? And it went into a massive rant on, depending on the size of the Easter egg, depends if it's got VAT on it or not. And I was like, no, it doesn't. And I literally had a fight with ChatGPT 3 to 4 times saying, I believe you're fundamentally incorrect. Show me your source data. Before it then turned over, and I think the fourth objection, and it went, sorry, you're right, I'm wrong. But if I had been less technically experienced, then I could have potentially taken that information on value and gone, okay, then, because it was very specific in how it quoted its information. So I could have gone, oh, well, it's based on, it was more of a diameter, 18 centimeters or whatever it may have been. Presumably these models you're talking about, or these tools, are specifically loaded with information that's factually correct, and it blocks out any other type of rubbish.
That is a great question. What's my view on this? I think that there's two things there. I think there's the underlying models, and how they operate, and then I think there's a marketing layer on top. I think there's a few people that are marketing these models as if they were that, as if it's kind of like, no, we don't train it on anything else. It just works on these source documents. Therefore, it's there isn't a documented error rate. It won't hallucinate. It will get everything correct because it's working within these bounds. The models don't quite work like that. So really, these are predictive models. They can appear like they are reasoning, which is why everybody, well, you kind of fall in love with them because it feels like you're asking a question and it's answering, and people call it kind of a masquerading algorithm because it appears like it's reasoning, but it's actually not. Really, these are sophisticated. They're incredibly sophisticated guesswork, basically what they're doing. Two analogies I've got really on models which are really interesting. One of them is really around behavior. So traditionally, back in the day, you would go into a library perhaps, and you'd ask the librarian, I've got a tax question, and the librarian would say, brilliant, it's, go to that area of the library, that aisle, maybe on that shelf you'll find a book. You find the book, you read it, you kind of come to your own conclusion. The internet and semantic search changed behavior slightly, so you didn't necessarily go in and ask a librarian and find the book. You would say to the librarian, I'm trying to find something on this area of tax, and they would produce the book from under the desk, and say, there it is, go and read this book, the answer's in there. So that changed the behavior slightly in the process you would go through. I think large language models now is really, you ask the librarian the question and they give you the answer.
Yes.
And then what they might do is say, oh, and here's the book that I got the answer from. So that kind of changes the behaviors. But models have documented error rates. They will always have documented error rates. There isn't really a way to stop hallucinations. It's just inherently part of the models. It's how they operate. The question is, does a model get things wrong as much as maybe a human would get things wrong? So a human might not read all the materials. A human might misinterpret some of the materials. A human might misread something, for example. So it's not that humans are 100% accurate and models are not. And it's not that models are 100% accurate and humans are not. I don't think that there's lots of different techniques you can do with models. So I personally wouldn't use, if you're doing tax research, I personally wouldn't use kind of commercially available generic models. They will be okay. They will probably roughly get you to the answer there or thereabouts, but it will require a bit of reading around it. The paid models, obviously, the generalist paid models are better because data privacy and protection is really interesting. tax specific models. There are certain things you can do. There are techniques like fine tuning, as an example, that potentially will reduce the documented error rate. But there will always be hallucinations. I think that's what's fascinating with this technology is if you're just using it as kind of like a control F function, it's brilliant. Find me something in these documents. It is fantastic. The error rate on that is very, very low. It's very, very good at find as a kind of supercharged control F. If you're asking it to reason over kind of complex tax matters that requires multi-step reasoning, they're okay, but they should really just be the starting point. The starting point for what you're doing, plus obviously getting the source documents for you to do further reading. And I think that's the real danger, is actually that the profession, because it's so easy to do, and we're human, and we're busy, and we're time poor. The real danger is that we're like, oh, I don't need to go and read. No one likes picking a book up and reading all the pages and making sure that they've actually read all the various bits. Nobody really likes doing all the digital semantic search and reading all the resources. So I think now that there's an ability to ask a question and get an answer, I think humans are naturally just leaning into this. We're kind of like unconsciously just like falling into this space where we ask the question, we get the answer. It sounds plausible, and we start to trust the output too much. And I think that's the real danger, is when we just start trusting the output rather than actually checking it coming out of the systems. And most people say kind of, proper professionals that we just use it as a starting point. We will read the output, but I think everybody will say, I'll wake up with a 6 a.m. alarm. I go to the gym first thing in the morning. I'll have my breakfast before I get to the office, etc., etc. I think in an ideal world, everybody would do those things, but I think the reality of life is that actually, when you're kind of up against it a little bit, if you can just ask a question and get the answer, I think human behaviour just starts to lean into that quite a lot.
So obviously, you said, you and I had discussions before now, obviously with the whole MTD for ITSA thing coming in, bookkeepers potentially are going to become, to some extent, the new gatekeepers for tax, because ultimately they're doing the quarterly filings and stuff. Presumably things like this are going to come up. They're going to get more questions asked to them than maybe they would normally happen, because in a normal scenario, perhaps the bookkeeper will be just doing the bookkeeping and maintaining it all year long. Then come the year end, the accountant will prepare the tax form, and therefore the accountant will get swamped with the questions of what about I and all this stuff. Whereas where we're doing these quarterly reportings, potentially because they will result in an estimated tax liability for the client, just to keep them in the know, presumably that's going to trigger more questions. Do you foresee the need for bookkeepers to have some form of software like this available to them, or would you in that case advise that potentially they would be better off still batting the questions to the final year-end accountant if that's not what they already do?
Yeah, no, good question. We've talked about this quite a lot, and I think we share a similar view that the kind of potentially long term, next maybe 5 to 10 years, you think about how the profession is structured in terms of like firm size, and kind of who does what, who provides what service, and it feels like the middle ground, that might be the death zone in the profession, is almost like the middle ground. So your general practice accountant, who does have maybe a once a year type relationship with the client, just prepares the accounts, just does the tax return, and doesn't really do much in between. That potentially is the death zone. And what you start to see is bookkeepers become, it's fascinating, right? For the last 10 years, everyone said, oh, bookkeeping's going to die, it's going to be automation, they're going to disappear, It actually feels like the bookkeeping is going to become super important, because that is the day-to-day data, it's the transactional information. That's the foundation on which everything else is built, from MTD and quarterly reporting and various other bits. So that becomes almost critical. Every 3 months, everything's correct and it's up to date. And then you then get the death zone, which is the accountants in the middle, who are just kind of that once a year type accountant. But then what you might start to find, I think the larger practices, we've got the consolidators. That's a very interesting space at the moment, with Assets and Zenith and a few others. But I think some of the other accounting firms start to have fewer clients, but start to have much deeper relationships with clients. And whether that's actually they're doing the bookkeeping for them, or that client has a bookkeeper and actually just leans into kind of like this fractional CFO or fractional FD. But I think to me, that feels where I know too many accountants that kind of sit in that death zone at the moment, and we have conversations and they're like, we've got 2, 3, 4, 500 clients. we've got X number of team members. You look at the metrics of that practice, and actually they're not very efficient at all. Revenue per head, the time billing, the recovery rates, everything else are just not, the metrics are not brilliant there. And actually what you kind of look at those businesses and think, well, actually, if you got rid of X% of your client base, trimmed the team down, became more efficient in operations, actually had a much deeper relationship with a smaller number of your clients, then that to me feels like the way it's going to go. So you kind of, I think you then get kind of, it polarizes. Bookkeepers become super, super important, and accountants who have fewer clients but deeper relationships become super important. You'll still have the big advisory firms. They're probably not going to go. They're probably not going to go anywhere. They'll still be around. But yeah, so I guess to answer your question, if you're a bookkeeper with a client and you've got that kind of relationship with them, there's absolutely no reason why tax doesn't become part of your domain, really, I don't think. And just have those conversations with clients. And ultimately, the clients, from our experience, all clients are interested in what tax advice do I need? Am I paying the right amount of tax? And what tax advice do I need? And they just need some kind of certainty around their tax number. Is this the right amount? And how do I know it's the right amount of tax? How do I know I'm paying the right amount of tax? And that's where kind of like deterministic tax checks and that sort of stuff come into the mix. But yeah, I think bookkeepers are going to become super important.
Oh, absolutely. But I do still feel quite for the bookkeeper that's never specialised in tax or had a great dealing with it, because they've done a beautiful job of maintaining records throughout the year, and given an accountant, for example, here's a beautifully reconciled trial balance for this client. You get to take the glory almost in doing the return for the tax. How, if the client then looks at it and goes, well, hang on a minute, you submitted all 4 quarters throughout the year. Yeah, there was a small adjustment at the year end. Why am I paying the accountant? I just get you to do it all. It's really hard as a bookkeeper to know what you don't know. So you might look at a tax return, assume it's correct, because you maybe don't know to ask a secondary question or to check something. It's that middle ground of like, well, yeah, I can take on your tax return, but I can't guarantee I'd potentially be able to know everything unless I go and specialize in tax as well, which some bookkeepers want to do, and some quite happy not to. They just want to do, a really good job to a certain level and press pause. How do you feel they would handle it? Is it worth the risk of potentially the client can save X amount of hundred not getting their tax return done by an accountant, but they may miss out on opportunities because you haven't got the specialist tax knowledge?
Yeah, I think the trick is democratizing tax knowledge. It probably goes back to the original. I mean, not plugging syntax too much, but that's kind of what we're trying to do. It's kind of that idea of democratizing tax knowledge. But it's you go back to your Tology, Kroner, and your Bloomsbury's, kind of like entry level access to that sort of, well, to those tax libraries isn't cheap. Minimum couple of £1,000s a year to get basic kind of entry level access into those systems. And it goes back to his original point that all they really do is sell you access to tax knowledge, and really what accountants really want is application. So I think the trick here is democratization of tax knowledge. Is how do we take the tax knowledge, how do we put it in a format which bookkeepers can apply to their client base, to help them identify the opportunities? Because that for me is the big trick. Is how do I if I'm a bookkeeper, how do I identify what tax advice my clients need? I think the really interesting point after that is there's two very big buckets, which are identifying what advice clients need and then implementing that advice. As the bookkeeper, you don't necessarily need to do both. You could just identify what advice is needed and then hand that off to somebody else to implement. Or if you wanted to, you could do the implementation. And I think technology's got such an important role to play over the next 5 to 10 years on both fronts. So helping to identify what tax advice clients need, but also then potentially helping to implement that advice. So can we build technology that almost acts as a kind of like expert guided workflows to help bookkeepers implement tax advice? I'm not saying go away and start running reorganizations and restructures on group entities and all that sort of stuff, but there are certain bits of tax advice which could be implemented by bookkeepers with expert guided workflows. So if you're worried about kind of knowledge gaps, I think that's where the opportunity for the technology is to step in and fill those knowledge gaps.
And how long, in terms of like a timeline? I'm asking a stupid question here, but if I said to you, put a tenner on when you think we would be at the stage in time where you could potentially be a bookkeeper who then turns around and says, do you know what, I'm more than confident in doing, I know, even if it's just a full self-assessment, but with a proper review of that information, because I know I've got a software here that would review it with me and tell me I could be missing a trick or a flag or something. How far is that away from today?
So you can do reviews now. So kind of like pre-year end. So we have a pre-year end tax planning tool. We have a post-year end tax planning tool. And we have a CT600 tax planning tool. And the concept there really is that we take the partner level knowledge and we build it into an expert system, a deterministic expert system that actually takes client data, plugs into our system, applies that knowledge to that client data, and then gives you reports. So that sort of technology is here today. There are two types of technology being built at the moment, whereas maybe 4 or 5 years ago, there was only really one. So, in the tax technology professional services space, it was really kind of expert systems, kind of rules-based expert systems were built 4 or 5 years ago. We've now got probabilistic technology alongside deterministic technology. So the probabilistic technology is kind of the large language model based tools, which are AI agents, agentic workflows, etc. That's kind of the evolution of that. So you've kind of got these two bits of technology being built. We're very much in the deterministic camp. So our whole thing was around consistency and accuracy. All the feedback we had from accountants was, if we are having application of tax knowledge, we want it to be consistent and accurate. They were the two biggest bits of feedback. Probabilistic software doesn't necessarily give you consistency and accuracy, or doesn't necessarily guarantee it. So they're the two types of technology being built. The deterministic expert system technology really is just about who's building it and how long does it take to build. It takes slightly longer to build than probabilistic software. So that's there now. Kind of like the identification stuff is here. That exists. We've got it. The really interesting thing, it's very hard to build expert systems that help you implement tax advice because there's a lot more nuance, there's different layers, there's a lot more kind of external context around it. I think that's where probabilistic technology will really help, is actually to maybe take a reorganizational restructure. But if you take the entities that you're looking to reorganize or restructure, it can look at the shareholders, it can look at the mirrorings, it can do the revenue clearances, etc., etc. There is a world where potentially in the future, the software can do that, can actually guide you, have an expert guided workflow and guide you through a reorganizational restructure. I think for the bookkeepers, it comes down to the professional indemnity is probably the big one as well. It's just coverage. It's just like how are you covered? Are you covered? But how far does your coverage go? But the good thing with the bookkeepers are, you guys have day-to-day contact with the client, right? You see the data on a day-to-day basis. It's always up to date. You've got access to the kind of like their foundational systems, their bookkeeping systems. And that's really where you can identify what advice the client needs. By the time you kind of get to the CT600, or you get the set of accounts, you're preparing those as CT600, it's almost a little bit too late. What you want to do is actually be identifying the advice before you're kind of preparing the compliance documents.
I mean, do you think that we'll end up with almost a middle ground, or like a happy medium as such, whereby because there's going to be, with the whole MT for ITSA coming in, but not so much this year, I don't feel, but maybe next year and certainly the year after, by the time we're down to like a £20,000 turnover, there's going to be so many clients that need assistance in preparing their records because maybe the bigger, more accountancy focused firms just don't have the capacity to assist the clients. Therefore, that workload goes to the bookkeeper. Do you think we'll end up with potentially a happy medium whereby maybe the bookkeeper's there and involved every day? They can utilize some of the softwares you speak about to potentially flag opportunities for more tax planning or changing, but then maybe because either they haven't got the license coverage to offer that kind of advice, or they just don't feel comfortable, perhaps that's when you'll find that there's maybe agreements or work exchanges with the accountants to go, do you know what, I've identified this for my client and I'll pass it to you as a referral, and you'll find a stronger building of relationships between the bookkeeper and the accountant, because we'll take it to this level, but if we get a query we'll pass it to you, and if you get a client where you think you can't service them for the correct fee, perhaps because of the involvement from yourself, you could pass that work our way, so it becomes more of a two-way street again.
Yeah, 100%. I think that works. And I think the referral partnerships will be a big thing. And I think potentially that also goes to the kind of the structure of the profession over the next 5 to 10 years. If you do start to see kind of just general practice accounting firms kind of disappearing slightly, and actually maybe as a fractional CFO or a fractional FD, actually, I mean, it's not my role, but if I was one, perhaps actually I have a relationship with 5 or 10 bookkeepers and actually the bookkeepers are doing the day-to-day stuff, the transactional stuff, the filings, quarterly filings, everything else, and actually it just gets passed up to do the accounts, maybe even the tax comp, but more of the reporting function. So you kind of what a traditional CFO or FD would do. I think that gets really interesting. I think there's also another big part of this is actually the generations coming into them. So we know there's fewer people coming into the profession than there historically has been, and we start to look at the kind of the generations coming through. Broadly, I'll get told off for this. Broadly speaking, I think the generations coming through probably have less patience than than the previous generations. So you just traditionally think. I mean, when I joined practice, you would join, you would be a junior or trainee, and you would work your way, trainee to junior to manager to senior manager, maybe to partner. And you think about that traditional flow, you would, if you made partner in your early 30s, you're a hero. Then you'd have another 30 odd years of earning good money, you buy into the partnership and then kind of recoup your money and then earn for the next 30 years. But traditionally, you were probably maybe in your 40s or 45, something along those lines. I actually think the younger generations, you look at, there's some very obvious examples in the profession of maximizing their media coverage. And actually, well, we're going to go out and we're going to get 100 clients. They're going to pay us £1,000. Maybe not a month, maybe a quarter, something along those lines. But you can actually, it's interesting to see whether that traditional partnership model will survive, or whether actually the generations coming through actually are, they don't want to wait 15, 20 years to earn their stripes, to then buy into a partnership, to then maybe make their money back. It's more like, it's the kind of, I'm going to go off, I'm going to get 50 clients, 100 clients. And have quite a nice small practice. But again, that talks about the death zone in the middle. And the big challenge will be those partners that have actually made partner, who's actually coming and who's buying them out. That's going to be a really interesting challenge.
Yeah,
I think over the next few years.
Because you've invested a lot of time and money to get to that level, only then to be found if nobody wants to buy you out.
100%. 100%. Yeah. And it's just like the younger generation, whether they've got the patience to actually go all the way through. And actually I think a lot of them look at it and think, I could just go and find 50 clients and actually have a really nice practice just with 50 clients. But I think what's really interesting is, I think that's kind of almost going to be the bookkeeper model as well. I think it's just going to be that is going to be, the market is just going to, as I say, polarize, and you're just going to have people who can do the bookkeeping and the quarterly filings, stat accounts, potentially a tax return, and they'll just have a nice client base.
I love that. Before I monopolise all of his time, does anyone actually have any questions they might like to ask Nick? It could be about something he's already spoken about, or perhaps another area which you've got a question on, be that the software or something else. If you want to raise a hand either virtually or... Oh, Claire's got a question.
Well, no, I'm just listening and thinking that death zone you talk about's really interesting, because I think that's where you talk about those partner-led firms where you get to a certain point and there's an expectation that you make partner, you buy into the firm, and then you almost hold it back from the next gen because you had to wait. And I think they're the firms that perhaps are in that death zone because they don't want that change, because they've worked all that time to get where they are, and almost don't want to hand it to the next gen on a plate because they had to work so hard for it. And I agree that they're going to be the firms in that death zone because they're not prepared to. They don't want to get closer to their clients. They don't want to build deeper relationships because they've had it quite easy in terms of making quite well income wise out of tax and compliance. But I do agree with you that generative AI brings a different landscape to the table, where now you can broaden the reach of simple tax calculations to the masses. And that's, we're not talking about restructuring businesses. We're not talking about complex tax situations. But if you've got a simple, my personal tax situation is really easy. So actually, do I need an accountant to do it? Probably not, but and I think that's where there's a lot of folks in that situation where they, as long as the bookkeeping is sound, and I agree, that's the basis of everything, that the bookkeeping has to be sound. And then typically, it's that whole rubbish in, rubbish out. If the data going in, the bookkeeping data is sound, then what comes out the other end, generally speaking, is going to be so too. So I think that's really interesting what you say about that death zone. building better relationships. And then there's an opportunity for bookkeepers to perhaps offer additional services to some of their clients.
Yeah, 100%, 100%. And even relatively straightforward stuff like salary dividend planning, pension contributions, that kind of basic entry level tax stuff.
KYC, yeah. I mean, how can you do dividend planning with your clients if you don't know, for example, that their outgoings are about to go up because they're moving from a 1% mortgage rate to a 4% mortgage rate, you know? But, you know, the tax tail wags the dog always with clients. You know, the first question they say is, I want to save less, I want to save tax, I want to pay less tax. But actually, it's like, well, that doesn't help you pay your bills. So, you know, let's start with what do you need? And then let's build out from there, and let's see what that throws out as a tax bill, because ultimately you're going to pay the tax that legally you have to pay based on the drawings that you're taking from your business. So, you know, an accountant can't make you pay less tax, but, you know, if ultimately there's no magic wand there, but, you know, I think that's the problem, is that a lot of clients, they start the conversation with, I want to pay less tax, without a thought to, well, that's going to impact your standard of living. Are you okay with that? Or do you want to see paying more tax as a benefit, as a byproduct of actually being more successful? And that's a different way to look at it. But you might end up paying more tax, but you've got a better standard of living.
Yeah, 100%.
But your product, I would imagine, can then do the difference and show the clients, well, actually, if you need an extra £1,000 a month because you're going to be, you know, your kids are now going to nursery and that's what it's going to cost you, this is how you can draw that in the most tax efficient way. Yeah.
I mean, the kind of simple premise for us is that what we're trying to do is take, if you're a tax partner and you did know everything and you did understand all the client's data, that's what we're trying to build. We're trying to build a system that behaves as if you had a human in the practice, sitting down at a desk, give them access to the computer, the client files. And that's basically what we're trying to build, is a piece of technology that behaves as if it does know everything, and it does know all the client data. Because the big thing is, you know, we talk about, is AI going to replace accountants? It's a very kind of nebulous topic, but you know, and it's a bit cliche to say, but everyone talks about, you know, the one thing is not going to replace is relationships, etc. But I do think they're going to be the big thing, is actually identifying what advice the client needs, helping to implement that advice. Isn't really going to be the big winner, I don't think, in the future. The big winners are going to be the relationships, and that's where bookkeepers have a massive advantage over everybody else, because they have day-to-day-ish contact with clients.
They build a relationship.
Yeah, 100%.
And they always see the patterns like 10 million years before any accountant will, because of their close relationship and being in the data. It's all very well, if you gave the accountant and said, stop, look at this, they could see it. But if they've not been asked to stop and look, or if they've not had the opportunity to, or not needed to, then you could be looking a few months down the line and it's too late. Whereas if potentially, and I don't know quite how frequently all of our bookkeepers on this call potentially do their bookkeeping as a bookkeeper or an accountant, but me personally, I like weekly bookkeeping, because if you do it monthly or even quarterly, sometimes you can be almost caught off the cuff by being that far behind. And that will make a big difference in how quickly you can act and respond and see what's going on with a client. And I think what's really nice, so I've worked with both Claire and obviously spoken to you about your software too, is it's about empowering the firms to be able to get that much closer and to have almost like a backbone of support. Like, okay, that's fine, I feel confident, because you don't necessarily take verbatim what the software tells you. You can still go and check it out yourself, or check the logic or the reasoning, because a lot of it, I think, is trust. It's trust in the system outputs telling you things that isn't jargon, because there is so much rubbish out there in other systems. It's a bit like, am I going to really say this out loud because the computer told me I can? And it's, you know, and I think as well, over time, your knowledge will automatically be improved by using the software, because if it keeps telling you time and time again, think about this, you'll automatically start thinking about this, you know. It's like anything, repetition is really important, and it will teach you, and it will hopefully guide you through the same kind of steps that someone who specializes in that area would at least start with and then expand upon.
Need it to show the workings out, Donna, like in the good old days when you did your maths exam. You have to get points for showing your workings out.
You could just draw me a couple of T accounts as well.
I might get the answer wrong, but if your workings out were good, then you know you get a few points.
Still
there.
got some marks, yeah,
Yeah.
100%. So I passed most of my exams, I think.
Oh dear, I love that. Did anyone else have any questions at all, Nick, today? I thought you were pointing to yourself for now. You're not just having a little scratch. Okay. Well, in which case we shall draw this up to a close. Thank you so much, Nick, for having a chat with us today. It has been really, really interesting, and I think you brought some really important topics to the table and giving us all some good thinking points. Obviously, before we end the call, if you wanted to give a quick plug to your software that you've been just hinting towards, you are more than welcome to tell everyone what it is and how they find it and any special offers or promotions you might be running. The floor is yours.
Yeah, well, thank you. So it's called Syntax, syntax.tax. So Google syntax.tax, you'll find it. It's basically we run pre-year end, post-year end, and pre-filing reviews at the moment. There's about 100 odd workflows that we will add into the platform. But basically, we can review the mantra is that we can review every client every year for every area of tax. So we just identify what tax advice clients need, and then maybe at some point in the future we will build software which helps you implement it as well. But TBC on that one.
Confessions of an Accountant, where no topic is off the ledger.